Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, March 24th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We have our second day of Fed Chair Powell testifying here today. We also have crude oil inventories later on in the day. Lots more Fed speak ahead, as these markets right now are currently in a 4-day narrow range here, at least from the ES perspective. This 4-day range is developing just above or right at that 3,900 level, below the previous month's close after the recent reaction away from that zone. And again, we're looking to see, does this thing build enough energy here in the Pima trigger zone to lift out and continue higher through that 3,950, or do we see another swing move downward toward the bottom end of this channel? Any failure again to hold that 3,900 level here could open up a bit more selling pressure up ahead, followed by what could be another reaction at these lows, similar to what we've seen time and time again, that could lead to another rotation back up, perhaps toward that 4,000 level. So right now, watching to see how price plays out. Any failure to get above the previous session's midpoint here, 39.15, could be an early indication of weakness to come. Any acceptance above 39.15 opens up a return back toward recent highs. Taking a look here at the NQ, you'll notice with the NQ we are holding below the 13.2 level. Right now, the market is almost, it's inside day here to the previous day, but almost a double inside day. Yesterday we had a price push just beyond the previous session's high, but right now an inside day situation here. With today's range just 42% of average range. The NQ has been averaging just over 300 points per day on a 5 and 10 day average basis. Right now we have 129 points in this narrow range here today. This price right now, again, compressed here over the last couple of days. And overall, we may see a bit more strength to the upside, but again, we've been seeing weakness between 313 and 267. That zone right there has led to several rotations down away from that area, and right now we're seeing price push up a little bit here above 13,170. Opens up a bit more strength into the 313s, and eventually we could see expansion from this range at some point, one way or another. This market has been trending higher and is building this energy down here at this lower edge of the range. We could see further compression here within this boundary, 300 here, 650 here, and see more compression followed by eventual expansion that leads this thing much higher ahead. Alright, so right now keeping an eye on further price action here with an upward bias down the road. Keeping in mind right now that the inside day could continue to build a bit of more energy before it's ready to go. Take a look here at crude oil. You'll see with crude, this one had a significant pullback in the previous session. We had a significant breakdown from this narrow range, a couple of hold days here, another big day down in the previous session. That's 2 days down hard over the last 4 days. We've now seen a fade after trend day where prices return back to the previous session's midpoint. Again, something we talked about in our trading room yesterday afternoon to watch out for in both crude oil and RTY. Right now, this bounce right here could be met with additional selling pressure here, as $60 is now the key overhead level to watch. Any rejection or failure to find acceptance above that zone could lead to another round of weakness here, as this thing perhaps returns back towards CVPOC below at 52.84. Lastly, taking a look here at gold futures. This one is compressing. We have a narrow price range that is developed here over the previous 7-day range, 1, 2, 3, 4, 5, 6, 7 days. You could go 8, 9, 10 days back and could still be compressed. Overall, this compression right here again is developing energy for the next move, and we can use this range to quantify what that expansion may look like. So if I squeeze this up a bit over here, you'll see that 78.5 points is the likely expansion that we could see. Fairly narrow as well, but here it is right there, the top end of that range, 78.50. We're at 55% of ADR on an 8-day basis right now. So again, they were quantifying this narrow range. Whenever we see expansion, it could lead to a move of at least 80 to 100 points here. So if we were to see a downward move first and fail, we could use that low right there and then project higher from that low, 80 to 100 points for the next upside target. Likewise, we could see the same thing if we were to break to the downside. So right now, this market has been trending lower, and every pullback has been a selling opportunity so far. And so right now, not expecting this thing to really break free and get going to the upside. Again, that 1766 level is the key level to watch there for any kind of transitional phase. But if there's a failure here, we may be looking at a breakdown through 1715, 1710, which could lead to the next wave of weakness down below. And again, this range is forecasting about 80 to 100 points of potential expansion up ahead. All right, that is it for now. We'll see how this develops heading into the rest of the session. Again, keep in mind, Fed Chair Powell will be testifying in about an hour, and with crude oil inventories on deck. All right, that's it for now. We'll see you in the room. Take care.